Good afternoon traders, it's Mark here from Trade and Train. It's 4:26 here in the UK. We've just basically come into the London fix and we're seeing, well, it's been a very strange day indeed. Let's take a look at sterling, or cable as you might prefer to call it. What a move today, based on not a lot really. I mean, we look at the government borrowing, it's been the highest since 1960s. We're 2.3 trillion in debt. We're talking about negative interest rates, and it moves 230 pips to the upside. So sometimes it just shows that fundamentals don't always go as planned. On the bright side, you could say that talks between the EU and the UK have continued, although there's still large gaps between fishing rights, level playing field, and governance. So, you know, it's one of the things that we're as much as close to a deal as we are from not having a deal, but yet we see these kind of moves. We have been advising that, you know, anyone that is trading this could experience huge volatile moves. So things to look out for. We've highlighted the previous highs and lows, what to look for. And if we close above these highs, which, you know, at 130.70, and we're sitting 70 points above that high, I pretty much expect the market to stay above there. In terms of looking for trading opportunities, well, you know, like I'm saying, if you are looking for technical setups, then you could see the market, providing buyers come into the market once price does come down to this 130.80, 130.70 area. You're going to want to see buyers come in before you even try and take hold of this market, because as quick as it's gone up here, it could drop straight back down. So in all honesty, if you're one that wants to preserve capital, it's probably a market that you really want to stay away from. But if we look at the Japanese yen or dollar yen, this market did move significantly, as did most of the markets from midnight pretty much. The swing for the dollar weakness today, I'm not really sure what did give the shift in sentiment, but it's been a strong shift. Not something we were anticipating. You know, if you've been watching our previous videos, we have been looking and been trading dollar strength. The clue that this could potentially be showing is maybe we might see some weakness in indexes, and if we see the weakness in indexes, then that could translate, and we could see some dollar strength as money moves into safe havens. I wouldn't say today is a safe haven move, even though we are seeing this yen strength, because if we look across at something like the Australian dollar, we're seeing a solid push up here on the Australian dollar. But if we look at the daily charts, we see the natural move down. We've had a correction, we've had a lower low, and now we're having a correction again. So, you know, anywhere through here, once we see sellers start coming back into the market, we could see another push to the downside. I do expect if this is going to happen, we will probably see stocks drop lower. So let's take a look at a couple of the indexes to give you an insight on the levels of interest. So if we just look at the Nasdaq and we go to the 4-hour chart, you'll see through here about 11,600, and at the highs here 11,800. While we're stuck in this range, it's not something that I would be saying that we're in a risk on or a risk off mood. And if we get a break above, then obviously that's going to be a risk on environment and continued for dollar weakness. If we break below, then we can safely say that we should see yen continue to strengthen, and we could potentially start seeing some appetite for dollar buying. So in the meantime, I'd say it's a case of sit tight, wait for the market to give us those clues before we start trading accordingly. Moving over, looking at Kiwi, you can see this has had a nice risk move today, but it's not a risk move. Why do I say that? Because it's been dollar selling and yet the indexes have remained flat. So US dollar has sold off, Kiwi's got stronger, but it's pushed up back into this 66.80 where we've seen the market rally up to before and then sell off just as quick. So questions to look out for and clues to watch for will be, if we get a close above this high here, then expect to see further upside. In the meantime, if we see some sort of cyclical change here, we can trade this down back into support, and then we'll be looking for clues going back underneath this counter trend line and further downside towards 6,500. But again, like I say, a lot will be dependent on what happens when we look at the indexes. So I gave you the levels on the Nasdaq. Now if we look at the SP on the 400, very similar. You can see we've got I'll just, oops, let me just pull in the crosshair. So we're talking 3,400 roughly on the S&P, and solid close above 3470, and we'll be looking for that upside. So very similar to the Nasdaq, we've got this nice little box range. If we break above, we'll be looking for risk on, so that's dollar weakness, potentially even yen weakness. If we break below, we'll be looking for dollar strength, yen strength, and we'll be looking for those risk currencies to be selling off. That's the Aussie, the Kiwi, and the Canadian dollar. So I think that's it from today, guys. We do have the final presidential debate coming up Thursday, the 22nd. So that'll be late US time, early 23rd here. If you do have any questions regarding the content that we put out, or you would like us to basically look at a chart that you would want us to cover, whether it's a commodity, a forex, or index, please let us know in the comment section below, and we'll be sure to cover that chart for you. So if you do like what we're putting out there, please hit like, share, and subscribe, and we'll be posting our next video at some point tomorrow. Have a good evening, traders. Bye bye.